Let's get more on this from John Sfakianakis. He's chief economist at Banque Saudi Fransi. John, great to have you in the studio. Now, in terms of what we're seeing here, it's the second time, I believe, in the IEA's history that these reserves have been released. Is this a direct message to OPEC? And guys, you should have actually increased production.
Well, absolutely, but also it proves that Saudi Arabia was right to say to those who were voicing opposition to an output increase that basically you are right, Saudi Arabia, to say that the market might need more oil, so let's do it.
But what might Saudi Arabia actually do next? Is there any suggestion that Saudi Arabia will go, hang on a minute, let's pull back our production, you can't push us around?
Definitely, if this is the case, if the market is there is more physical oil, then definitely Saudi Arabia will have to reduce output.
You see, the problem that struck me is that things could get an awful lot worse globally, and I'm wondering whether the IEA has actually used its last bullet at a time when it didn't really need to.
Well, Owen, you're right. They could have waited a little bit, also because the dollar has been fluctuating quite a bit, and also political risk in the region, in the Middle East, has been subsiding a bit. So it could have been that this happened at the wrong time. But again, Saudi Arabia said, listen, we're going to go our own way. We will increase output because we want to bring oil prices at the 90s level.
Yeah, John, I actually want to move on to actually what we're hearing from Europe and from Greece, because we also have some breaking news over the last couple of minutes. Bloomberg has gotten hold of the draft, which one of the leaders will discuss later this afternoon. And they're actually saying that, well, the recovery seems on track, at least here in Europe, and that the euro is based on very sound fundamentals. Now, I know this is something that's very close to your heart, John, because, of course, you're Greek and follow the situation in Greece very closely. Essentially, will the country have to default?
No, I don't think so, Francine. I think that they will be bailed out by the EU, the IMF, second time. They'll go to the parliament, they'll vote it. A vote of confidence will be positive. In any case, the current government has majority, so they'll be able to do that. But that doesn't mean that the problem is over. We could be, in a year's time, going for the third bailout in a new government.
We're just getting an extra line on that coming out from that meeting. European leaders saying they will do what is needed for financial stability. Of course, they're going to say that. I'm interested to see whether you think the Greek government can and will do all that's needed to get this next tranche and actually to fulfill those commitments.
Well, the bitter pill has to be swallowed, but the issue here is that they have to cut down the public sector by 70 to 80%. And as long as they don't do this, privatization is not going to fix the issue, because now they have the assets that very few people want to sell, plus they have the structural issues, red tape, bureaucracy, lack of transparency. So certainly they will sell something, but they're not going to get everything.
John, when this draft that we're hoping the EU leaders will sign says whatever is needed for financial stability we are ready to do. Do you believe them? Because it has taken them such a long time to actually find some kind of common voice, which even today we're not sure whether they completely have yet.
I think that they will find the voice because there is a systemic risk, both in Europe and the US. But in a year's time, when there is less of a systemic risk, they might say to the Greeks, listen, you need to deal with this in your own ways and you need to fix your house. We cannot deal with it again. And of course, the issue of debt sustainability and growth is a long-term problem for Greece. And I think that for the next 10 to 15 years, Greece is probably going to see what Japan saw in the 1990s, very little growth.
And of course, the privatization, this is something that we're talking about whether they'll be able to sell. They're trying to get, what, 50 billion over the next 3 years. Will they be able to get that money? No,
I don't think so. I think at best they might get 4, 5, 6 billion.
That little?
Yes, because between 1997 to 2008, they were able to get from privatization 17 billion euros. So now, when Greece is really at its lowest ebb and nobody really wants to touch Greece, the valuations will be quite difficult to get.
So who will they actually sell it to? Will it have to be a friendly country? Will they have to have back negotiations to try and get one of the European countries to buy some of these assets?
Or will actually China come in and say, you know what, looking at the longer-term goal of this, that is an opportunity and a half?
Maybe China could be. They bought into the port of Piraeus, but they have been having trade union problems. So they will rethink. But Greece has to go up a little bit and improve itself. Certainly, I would say that beggars cannot be choosers. So whoever is found, Greece will have to begin to sell.
All right, John, thank you so much. John Sfakianakis.